Chapter 6. Who exactly are behind the scheme? So, when the US government would wanted to manipulate the gold market in a professional manner, what would be the best way to set up a structure in order to do so? Well, they will need to set up a task force which secretly will be attributed the task of suppressing the price of gold. This task force has to have a legal status in order for it to receive governmental funds and approval. So this task force has to have a legal basis in legislature. Therefore it has to have other non-secret tasks to fulfill as well. The US only occupies 2 official task forces that in theory could be fit for the job of gold price suppression. That is the Exchange Stabilization Fund, or in short ESF, and the Plunge Protection Team. The US Congress has no direct oversight over these task forces, so to a large extent they can act and hide in a cloak of darkness. You will also need a steady gold supply line capable of direct delivering the physical gold needed for the gold scheme to continue. And who has the yellow metal to act as such a supplier? Well, the Federal Reserve Bank of New York sure has the means to fit this role. And then of course there are foreign central banks. Yes, of course, you will need powerful allies in order to perpetrate a scam like this. And finally, you will need large-scale investment houses that interact with the market. You need banking firms that operate as agents to perpetrate a scheme in the fashion that suits you the best. So, now we've drawn the outlines of the operation structure, let's have a look at the evidence that is publicly available about who actually are involved in the gold price suppression scheme. First, let's have a look at the possible ringleaders of the suppression scheme, starting with the ESF. According to official statements, the ESF is not involved in the gold market, as you can read on this slide. So, now that it is official, I guess we can rule out the ESF's involvement in the scheme of manipulating the gold price. Hey, but wait, back in chapter 5 we already saw that former General Counsel of the US, Federal Reserve Board J. Virgil Mattingly, acknowledged to the Open Market Committee that the Exchange Stabilization Fund had undertaken gold swaps. So could it be that authorities are not telling us the truth about the ESF involvement in the gold market? Well, according to official balance sheets of the Federal Reserve, which before the year 2000 were disclosed to the public, a difference in the amount of gold the US holds can be noticed depending on the question whether you in or exclude the ESF's gold holdings. Note that the Federal Reserve's December 31st of 1999 balance sheet shows a gold stock of only $11,048 million, which is $41 million less than the $11,089 million reported as the total US reserve assets including the ESF. Since the gold assets on the balance sheets are booked at the price of $42.22 per ounce, in 1999 approximately 1 million ounces or 31 tons of gold were in the hands of the ESF. One can only imagine the amount of paper claims to gold the ESF could have made using that amount of gold to run a fractional reserve based gold scheme to artificially enhance the gold supply to the market. The ESF was created by the Gold Reserve Act of 1934 and operates on the authority of the US President and Treasury Secretary. Looking at the way the ESF has been embedded in the political structure, it would be ideal for running the entire gold price suppression operation. See, the Treasury cannot directly do a secret deal with foreign central banks and get away with it, because the Secretary of the Treasury is subject to congressional oversight. So instead of the Secretary of the Treasury and the President running a gold suppression operation, they can decide to let the ESF deal with interactions in the gold market, like gold swaps with foreign central banks. This way they can get around normal governmental procedures and regulation. The ESF is in fact just a slush fund beyond congressional oversight and is not accountable to courts. To me, it seems likely that the ESF is the ringleader of the government's manipulation efforts, but it never enters the market directly itself, regardless whether it is intervening in the currency or the gold market. The ESF works with proxies in order to cover its tracks. So let's have a look at the other players involved in the scheme. The Federal Reserve Bank of New York allegedly holds the single largest concentration of physical gold in one location in the world. There are over 9,000 tons of gold stored in the Federal Reserve Bank's vault that is located in New York. Only a fraction of this 9,000 tons actually belongs to the United States. When asked about its activity, the Federal Reserve Bank of New York never discloses for whom it is acting, claiming that its account agreements bind it to respect the confidentiality of its customers. The Federal Reserve Bank of New York is a private bank and it can't be subjected to independent audits instigated by the US Congress, or that is at least not at this moment. Because of its massive gold holdings and close ties to Wall Street, one way or another the Federal Reserve Bank of New York must be tied into the manipulation scheme in order to provide the gold bullion the major investment houses need to engage in the gold carry trade, or to deliver on their non-gold-backed paper promises to gold.